So inflation is high and everybody is worried about eroding the buying power of the money. But that is not what us financially savvy people are worried about. That's not our concern. We are talking about making profits during times of high inflation. And that's what we're covering in this episode of the Wealth Nation podcast.
Welcome to the Wealth Nation podcast, a podcast for every mother, daughter, grandmother, sister, and wife, and the men who are smart enough to tune in. The Wealth Nation podcast brings you all you need to know about investments, business, property investments, personal finance, and all-around financial wellness. Here is your host, Yolanda Rose.
Hi, it's me, Yolanda, and welcome to another edition of the Wealth Nation podcast. I am a wealth advisor and I am the director of Solomon Wealth Management, and it is my goal on this platform to give you easy, actionable tips, content, and strategies that you can use to manage your money well, live abundantly, and build generational wealth. If it's your first time here, where have you been? Lots for you to catch up on, so please download our previous episodes and have a listen. And if you're listening to us on any other device that's not your cell phone, you can download a podcasting app, something like Spotify, iTunes, Deezer. Download all of our episodes, plug it into your car, listen to the podcast on the way to work while driving around. And one thing I like to do, I consume about at least 10 to 15 hours of podcasts every single week. And I do that by speeding up the speed of the podcast. And I know it's a little difficult with me. I'm a Durban Indian. We speak very fast. Okay, but it can be done. So that's how you can catch up on all of the episodes that you've missed. The Wealth Nation podcast is brought to you by Solomon Wealth Management. Solomon Wealth Management is an innovative team of wealth managers that addresses the entirety of your life, your family, your business, your future, one facet at a time. We use our skill and expertise to the consideration of what you have accumulated and how best to administer it through life's changes. From financial counsel on managing your wealth to careful contemplation of how to transfer it to future generations, it's your vision for your future combined with our skill and expertise to help you reach financial excellence. So if you want to sit with us one-on-one, go to www.solomonwealth.co.za, click on the Get Started button, and we could be chatting one-on-one. All right, so we've been on this journey of trying to understand inflation for the last 2 weeks, and this is our third episode in this series of trying to understand inflation, and we're talking about how we can profit from inflation and how is that even possible. I mean, everybody's just trying to keep the value of the money, and they I come about and say that you can profit. Does it really make sense? Well, I'm going to show you how it can make sense. Okay, so to recap, what is inflation? It's the rate at which the price of goods and services rise. And this diminishes the buying power of our money. So our money keeps on getting watered down over time. So the price of bread today is very different from the price of bread 10 years ago. It was far, far cheaper, a loaf of bread 10 years ago. The size is all the same, but the price is higher. And we have to think about inflation. Remember, wealth building is a 3-pronged strategy. And each of these prongs are equally important. The first one is investing in risk. The second one is taxes, keeping as much money as we can legally of our own money, not somebody else's money, our own money. And 3, understanding inflation and leveraging inflation. Okay, so you don't think about inflation as much as you do because, one, we were never educated in this much detail about finance. So while we don't know much about things like investing and taxes, there's no way inflation is going to come to our mind. But the thing is, inflation is there. It's the unseen bill. Just like when you get your municipal bill, your bill when you go out to eat, your receipt, if you're filling up a tank of petrol, there's a bill. It's like a duplicate copy, right? But it's not a carbon copy duplicate. That inflation bill is there. And you just don't see it. But it's with every single bill you get 2 bills. Stealthy thief, the invisible tax. And it's there and you're being taxed on it. See it as a tax. but it's a different leg of tax. Okay, and it's because of this devaluing of your rands is why you don't want to keep R1,000,000 in your bank account for 30 years. And if you had $1,000,000 now and you want to keep it in your bank and thinking you're going to live off this, it's not going to work. I mean, with a 4% inflation rate over a period of 30 years, that 1,000,000 rand in nominal terms is still 1,000,000 plus in your account. But in terms of buying power, the real terms, the real value is actually 308,000 rand now over a period of 30 years. Inflation is not something new. It's been around for a long time. And during the time of, in Rome, in ancient Rome, they had these gold coins, silver coins. They used to inflate. They started inflation, So, the grooves that you get on the coin? The Romans actually started that because they used to be shaving those golds off. But here's the thing. There's a benefit to inflation, especially if you hold a mortgage bond. So in 30 years, right, for example, let's say in 30 years, inflation is at 4%. This inflation will eat away at your loan. So if you had a bond, 4,000,000 rand, eventually over time, that 1,000,000 rand is worth down to 308,000 rand because of inflation. So we find that property investors, I'm a big advocate. I'm a property investor myself, right? So property investors have the ability to borrow with long-term fixed rate bonds that basically tether into that income property at scale. So when you borrow this way, your monthly principal and your interest payments are completely outsourced to your tenant, okay, if you're into income property. So why you need to rush down to pay that loan when your tenant is eating away at your debt and inflation is eating away at your debt? Think about this. If you have to rewind and listen to that last 30 seconds again, please go and do it. So when you are a beneficiary of this kind of situation, you have to ask, why would you make extra payments on your bond when your bond is being eroded over time? Think about it, right? Would you put an extra 1,000 rand into your bond? Your bond is at what? 7-8%. When you can put that 1,000 rand a month into a unit trust, an aggressive unit trust that can easily give you 13-14%. Think about it. This is high grade financial education, guys. Think about it. The information that I put out on this podcast or any other content does not constitute as financial advice. So don't take what you hear here on this podcast and just go implement it blindly because I'm a financial advisor, okay? You need to speak to your financial advisor. You got to see if what I'm saying makes sense in your unique situation. So rather than using an extra $1,000 to pay down your bond, use it towards investing. Get more real estate. If you believe that property creates wealth and you want to control more property, not less property, you can't shrink your way to wealth. If you take R1,000,000 rand loan and factor in, just for the sake of calculations in my brain, 10% inflation over a couple of years, you will only end up having to pay it back in nominal terms, not the real term. Lenders are not requiring us to repay with inflationary adjusted rands, especially if you have a fixed interest rate. So it becomes 900,000. That 1,000,000 rand becomes 900,000 rands. And that's what you really need to pay back in real terms. And again, over time, inflation is eating away at that debt. And also over time, property appreciates. The value of that property appreciates. So while in one direction, inflation is eating away at the debt, in the opposite direction, inflation is increasing the value of your property. It's also increasing the value of the rents that are being paid year by year. So this is why it's becoming ever easier to pay back your debt. Inflation profiting is the silent wealth. While we have inflation as the silent tax, inflation profiting is the quietest wealth center of a property investor. Let's say you had a loan, right? You bought a property, you put a big deposit down, and you're paying 10,250 rand fixed rate amortizing bond over property that you're letting out. But your rental income will be rising while your bond payment of 10,250 will not be rising, because remember, we're fixed, and this grows your cash flow over time. No loans means no inflation profiting benefit. So there is a disadvantage to going and buying out a loan in cash. In fact, Mark Zuckerberg, a bazillionaire. Okay, no, I'm lying. He's a billionaire. This man financed his home, guys. Why would a billionaire finance his home? Because he wants inflation profit. Inflation transfers wealth. I know we talk about wealth distribution in South Africa all the time, but it's always race-based wealth distribution. But, I mean, if we're savvy about it, inflation transfers wealth from lenders to borrowers. Lenders are paid back with diluted rands. So inflation transfers wealth from lenders to borrowers. Lenders are being paid back with diluted rents. Inflation also redistributes wealth from the old to the young because older people tend to have more assets, younger people tend to have more debt. So property investors are in a great position to take advantage of this. To create wealth, you need to think and act differently from the crowd. Right? So stop that high consumer debt, guys. If you're getting access to credit, let it be to your advantage, not paying 20-30% interest to buy a TV or something like that. Leverage income generating assets, and real estate is one of them. You've got to have your debt originate from a smartly anchored income producing asset, and a property that's worth more than the amount of the debt is great. So you want to buy undervalued properties here as well. So if your asset value temporarily drops due to whatever reason, like a depression, like we saw about 12 years ago, you won't really be concerned whether the asset is producing income or not. Risk always exists, okay? With any investment, there's always a risk. But you must carefully select a cash flowing asset in the right area where there's jobs, there's population growth, there's demand. Like any business owner will tell you, you got to be where your clients are. So I know debt gets a bad name. And I think one of the reasons I don't talk about debt on this podcast enough is because of the negative connotation to it. I always want to approach wealth from a mindset of abundance. And debt sort of triggers a lot of negative feelings, because it brings bad experiences from the past, credit card debts, home loan debt, the store cards debt. But when debt is tied to an income-producing asset, it's a thing of beauty. And you've worked extra hard, you've got your side hustles going, try to pay down some of your debt on these knickknacks that don't pay you. That big screen TV that you bought on credit, it doesn't pay you. But an income property does. If you use smart debt that's tied with an income-producing asset, you're on top of debt now. You're not under that debt trap. So the bottom line here is borrow, but borrow wisely. And if you have substantial equity in only a few properties, make equity transfers to refinance multiple properties. Debt can create wealth if you do it smartly. Rather, create small equity positions in more properties than have high equity positions in few properties. So this will basically translate into smart debt if you work it right. And also, you're not losing equity here. I mean, you're maintaining your equity among a variety of income generating assets. You can also create better opportunities for yourself. You're not stuck in the city that you're in. I mean, coast to coast in South Africa, by flying is an hour and a half. You fly in the morning and be back in the evening. You don't limit yourself by geography. And you'll also have greater projected cash flows, especially if you've underbought the property, okay, and you have a decent equity, not too much, but you're leveraging that debt. You have greater cash flow where you're making your minimum payments on that debt, but you have a greater cash flow. So you've taken the steps away from debt freedom towards financial freedom. And finally, you're quietly profiting from inflation. The reality is the rand is going to continue losing value. It doesn't matter who's the president, which party is in power. It's just inflation. It's the rules of inflation. The rand will lose value. And rather than this causing frustration, now you know how to make inflation profitable. All right, so that's my take on how you can be profiting from debt and inflation. Okay, you got to use it smartly. Listen to this podcast episode again. Listen to the various segments again. Sit down with a pen and paper, or if you're savvy, on an Excel sheet, and make those calculations. Okay, just don't take what I say and try and implement it without doing your due diligence. Remember that the contents of this podcast is not financial advice. All right, so I'll catch you in the next episode of the Wealth Nation podcast.
Thanks for tuning in. Make sure to visit our website at www.financiallyfabulousfemales.com and sign up for our free investment masterclass.